What's going on, everyone? My name is Nicholas Merton here at DataDash, and today is November 19th of 2021. Well, folks, I hope you all are having a fantastic day wherever you are. And in today's video, I want to dive into why right here, right now, we may be at the final last steps of the correction, and that it may be time to start buying some cryptocurrency plays in the market that are at a good discount, as we've reached our 20% decline target in total market cap from $3 trillion in market capitalization down to $2.4 trillion. I'm going to be diving into the details of why I think this is the potential bottom of the correction or the lowest we're going to decline, and also some key plays in the market that we're keeping an eye on. Outside of that as well, we do have a sponsored interview with Pierce Ridyard, the CEO of Radix, one of the projects we'll talk about later on, one of the projects I'm really bullish on personally. So without further ado, let's go ahead and dive straight into the video, guys. So taking a look here, we had talked in our previous videos about a 20% correction band as we started to pull back here around 2.7, 2.6 trillion, and we came down towards our $2.4 trillion valuation mark, a clean 20% correction. But not only that, it's exactly where valuation had resistance back here in early October, here back in early September, and even here back in early May. This has been a consistent resistance range for price many times in the past, but once it was cleared through, it's pretty obvious, as we've talked about before with Ethereum and Bitcoin, what we're doing right now is taking this incredibly important resistance range and turning it into new support. I want to go ahead and just run through the charts here. We can take a look at Bitcoin, right? It's doing exactly this. We've had many retests around this previous range that has generally served as resistance, right? This high range here is where price is starting to build support before it can actually start to leapfrog higher. And again, this is why we've been so diligent on the idea that we're not going to be reaching 100K this year, but more likely in Q1. And then afterwards, we could see another mid-cycle correction and then a final rally blow off top towards 200K later, much later in 2022. All right, let's take a look here at Ethereum as well, right? Ethereum making a nice recovery here, popping up to 41.43 from the $3,900 lows. We can see here on the daily, what's Ethereum doing? Oh, it came right back down towards this previous resistance point. We had seen that it had tested previous support here as well in the past, and it's generally where resistance was back here in early May, again alongside most of the crypto market setting in those new all-time highs back in May when everything was very euphoric. Well, we've come back down here yet again, and we're testing to make sure that it's support, so we can set the framework here to continue climbing higher and eventually break out to new all-time highs. But again, I don't think things will happen so quick, right? We have to have conservative time frame estimations. It'll take some time to rise back up here and start to leapfrog higher. So give it a couple weeks here, right? I wouldn't say it's going to be happening overnight. The general crypto market over the last 24 hours here has started to enter into much more neutral or less heavy sell-off territory than what we saw before. We were seeing double-digit downward moves for the vast majority of the market the other day. A lot of that has now started to cool down, neutralize, and now we've got a lot of discount opportunities in the market, whether you're looking over the last 24 hours or the last last 24 hours or last 7 days. Now, big reason why we're seeing this correction the way that it is, and I think it's actually a healthy thing, as unfortunate as it is that the market was just as levered up as it was back here in May, right? And we saw a pretty good wave of liquidations, whether you're looking at BTC future open interest or you're taking a look at the broader market. We had a good range of liquidations here for the general market, right? This is just Bitcoin liquidation. So over the last couple of days during this correction, a couple $1 billion of positions liquidated. And if you're talking about the altcoin space, you're talking about probably one of the biggest liquidation waves we've had since back here sometime during the period during back in September, when we were starting to go through one of the first slighter corrections on our way back up towards the May highs. Now, I want to go ahead, and before we talk about these plays, guys, I don't want to ramble on too much. But again, this is like a real tragedy because unfortunately, there was a lot of people who got knocked out of the market back in May. And it seems as if, and I think there's a lot of people who are responsible for this, it seems as if people are still getting promoted the idea that no, leverage is the answer. You should start leverage trading. You should trade them, on Bybit and FTX. That's the solution. If you lost back your money, try to revenge trade. Try to get back, right? That's the narrative that everyone's sharing. And I'm going to tell you guys this. If it lost you everything last time, do you think it's going to help you get back your money this time? I don't think so. And guys, I gotta say, you won't see a referral link to these platforms under my videos. So again, I'm not trying to be grandiose about it or grandstand myself. I don't know what the saying would be. I'm not trying to put myself on a pedestal, but there's a responsibility as content creators about what we promote. And this is the reason why markets are so unpredictable here. This is why things aren't moving in a much more smooth line, generally speaking. The leverage and credit in this market is just abhorrent, right? And it's changed the dynamics of crypto. So you can either know how to use it properly, use it when no one else wants to use it, or not use it at all. And I'll go ahead and say that I recommend the latter. And I'll also go ahead and say it's financial advice. First off, vast majority of you shouldn't be trading leverage because 95-98% of people lose money leverage trading. They lose money. If not, they lose it all. Okay? So because of that, I don't want you guys doing that, and I'm not going to be promoting it. Sorry, other YouTubers might give you a more comfortable reality that you can make millions, well, because it benefits them, but I'm not going to be doing that here. Sorry, I'm a little bit vocal about it, but I just don't like it. Because there's already enough risk in crypto as is, right? But it's a really nice favorable risk to reward ratio where if you know how to trade the market properly and you don't invest in illiquid small cap coins, you don't invest in potential rug pulls or scams, and you actually diversify yourself alongside a lot of mid cap and large cap and some small cap plays in that case, you'll be in a great position. So for example, one of the plays we talked about heavily on the channel, we'll have an interview later on today, is Radix, right? One of the Radix is one of the major layer 1 protocols, emerging layer 1 protocols that's been a fundamental project building for years. Now they're finally starting to materialize some of the value creation, right? For Scripto, for example, their native programming language, which Pierce and I will talk about later on, as well is talking about the scalability and developer flexibility that Radix is going to provide, right? Another emerging layer 1 protocol. This is one of the many sectors we talked about here. We also talked the other day about energy as well, which has been blowing up over the past couple days, right? One of the smaller cap protocols in this case, but one that's been time tested, self-funded, didn't do an ICO, and is heavily focused around its founder, Tommy Will Power, which is another cryptocurrency YouTuber. We've had him here on the channel before. But again, another fundamentally valuable project, really starting to get some market traction. We can also take a look here at MVI, or the Metaverse Index. This is the MVI index, which takes a basket of metaverse projects, again, another sector we've been talking that we're starting to open up to over the past couple of weeks. It takes the performance of it against Ethereum. And we can see here that even in this downturn, metaverse tokens are picking up, right? They turned previous resistance into support. This is a big call we focused on within the newsletter, especially as we are taking this step into the metaverse. So again, if you're ignoring these trends here, and not saying that during this market discount, right, we should be picking up ones that are showcasing strength against Ethereum, right? Overall, you're missing big opportunities here. And that's what can allow you to make those really solid returns where you don't need leverage, and you don't need to take excessive risk, right? This is a broad index, and it looks like it's definitely got the foundation to continue moving higher, to potentially double against Ethereum. And we know where we're expecting Ethereum to go to this year. We're expecting Ethereum to go to $10,000, $20,000. So again, if you can get something that's going to double and outpace the already existing performance of Ethereum, that's going to be phenomenal. We can even see against USDC, right? Blowing to new all-time highs here, around $269 on the index. Up here from 30 to 50 bucks back here in July, right? Really kicking in some momentum, and it's not fading out here. It looks like it's very strong. But I digress here, guys. Look, overall within the market here, there's a lot to be thankful for in the sense of the discount opportunities. Just make sure you don't trip and make the mistakes that so many traders make when they get too greedy. They start adding in crazy amounts of leverage, thinking that, oh, I'll be able to buy it at the right price with that high level of leverage, and then the market's going to kick off, and I'm going to make 10, 20x the returns. Unfortunately, it's not how it works for the vast majority of traders. You can act like you're going through a casino in this case, as some traders do, and you can bet it all. You can put all your chips on the table and know that this bet is going to be the one. But unfortunately, the statistics are not in your favor. And I'm always going to stay clear from that, guys. I want you guys to focus on passively investing in the market. And if anything, if trading isn't your game, consider dollar cost averaging. And we're promoting that through Digifox, through our new feature, Get Paid in Crypto, that's going to be launching sometime early next year. You guys can join the waitlist if you guys want to check that out. We have a link down below in the description towards the Digifox website. But I digress. Let's go ahead and talk about some of the fundamental developments going on in the crypto space that are exciting through the protocol Radix, through today's sponsored interview. Alrighty, everyone. In today's sponsored interview, I'm sitting down with Pierce Ridyard, who is the CEO over at Radix DLT. This is one of the projects we've been talking about a lot on the channel, and there's been some really exciting news as of recent with the preview of the Alexandria update for Radix as a network. So, Pierce, thank you, man, for making the time. We've got a lot of things to honestly digest here, but I just want to say thank you for making the time. I know you are incredibly busy.
You're so welcome, and thank you so much for having me on the show.
All right, man. So let's go ahead and dive straight into it. So in regards to Radix as a network, there are a variety of different layers to the roadmap that are going to be coming out over the next coming months. But what we've got coming up here soon, we've got an official date for it now, December 15th, the launch of Alexandria. So by the end of this year, we're going to get a full view into the oversight of Scripto, the native language for Radix as a network that's aimed at dramatically simplifying developer times, increase security, remove a lot of the vulnerabilities and solidity for smart contracts. So I want to go ahead and kind of give you the stage here to talk a little bit about some of the recent events. We had the preview of Alexandria as well as the demo on Scripto. So what have people made of this so far, and what did you guys generally demonstrate as a whole?
Yeah, so like on last Friday, we were in New York and we had like a great turnout. I think like 6,000 people came in to sort of watch the preview of the language. And obviously had a load of people there physically as well. And the thing that we were sort of demonstrating, the first sneak peek of, is this way that we've come up with building DeFi using a new programming language called Scripto, but it's a bit deeper than just Scripto. The thing that is a little bit mind-blowing about all of these public ledgers is we now know that a public decentralized ledger is ideal for building decentralized financial products, right? Like on Ethereum, that's the boom industry, outside of NFTs. But these ledgers themselves, even though they are designed to be places where you create representations of value, be them tokens or pools or shares or whatever, they actually don't understand what those things are. Like an ERC20 contract is actually a program that defines what a token is every single time you release it, plus the balances of that token. So if you look at your wallet, your tokens aren't in your wallet. Your tokens are actually in an ERC20 contract that defines that your wallet is able to administer some of the rule sets in that wallet, which leads to these immensely complicated things. So we spent the last 18 months talking with developers to work out, DeFi developers and DeFi projects, to work out like what are the big problems that are facing the industry. And the thing is that the number one thing isn't scalability. Like that's actually number two. Like most people are like, there's enough growth on Ethereum, there's enough excitement in Ethereum for us to build here. And scalability sucks. Like, don't get me wrong, high fees are bad, and but that's not the biggest pressing issue that we found from DeFi projects. The biggest pressing issue we found was lack of talent. Like, just there aren't enough Solidity developers who are good, who you can trust to build decentralized finance applications that aren't like going to lose people, like at this stage, billions of dollars, which is kind of like the amazing and terrifying thing of DeFi and smart contracts all at the same time. So we spent a lot of time working out how we could make a programming language massively reduce that time to talent, the time it takes for someone to go from being like interested in starting to program DeFi to being competent enough to build fully secure decentralized finance applications that aren't insanely like complicated to architect and build. And what we had on Friday was the first sneak peek of that language.
Right. And to that point, Pierce, just to kind of step back, as you were talking about Ethereum, I think this problem has been pretty prevalent for a while, even back since the last bull cycle. Even if you're just doing, for example, something like, there's a lot of open templates on Ethereum, there's Open Zeppelin, there's a lot of platforms where you can use existing frameworks to launch an ERC. Getting the talent to be able to do that and make sure you don't make any mistakes along the way, because there isn't room for mistakes when you're deploying something to a blockchain. Right. That alone is going to cost you a lot. And you may be able to find that talent, but if you want to do anything innovative, if you want to be able to really step out of the comfort zone and not just build a typical automated market maker or depositing protocol where you earn interest, if you try to do anything unique, the chances of you breaking something along the way, especially if you're going straight to mainnet, is incredibly high. not going through all the proper phases. So it takes so much rigorous time and also talent in this case to be able to actually build applications on Ethereum. And I say that as someone who loves Ethereum. We've been building in the Ethereum ecosystem for a while, but there's a lot of friction points. So to that point about Scripto, one thing that I think was really cool during the Alexandria preview, you guys had the Scripto demo. And I think that what's so telling about this, Pierce, is you guys have obviously got the throughput to be able to scale DeFi towards a larger audience in the long run.
Right.
Dan has talked a bit about this and stuff through a couple of different webinars and videos on the YouTube channel, but really focusing here on Scripto, what I love about it is, as you mentioned, not only the security element of it, but the simplicity and the speed of development time. So again, guys were talking about the metric of basically repurposing, rebuilding what is known as Uniswap on Ethereum, the biggest AMM. So the biggest, clearest use case of DeFi, 155 lines of code on Radix.
Right. And 155 lines of code includes comments and white spaces. So if you look at Uniswap, the code base for just Uniswap core is like 10,000 lines of code in Solidity, and the architecture is kind of insane. We you and I have spoken about this before. And then in Scripto, it's 155 lines of code, including comments and white space. And so that kind of gives you an idea of why it becomes simple, as in not how it becomes simple. Why it becomes simple is a sort of more interesting question as well. Is like we took a step back and looked at how you would want to build in an ideal setting. So we have this idea of wanting how you architect something and then how you program it to be as close as possible. So if I sat down and knew nothing about Solidity, how would I draw a block diagram of how I think Uniswap should work, right? In terms of like the funds go in here, there's a pool this side, there's some logic here. When it sees the funds come in, then it does some simple maths and the funds come out the pool the other side. That sounds like about how it should work. It's not how it works at all in Solidity. And that's why it takes so many lines of code in Solidity and Ethereum. What we did is we've done the same thing for decentralized finance as happened in the games industry back in 1990, when, back in the day, a developer was expected to build the entire stack for a game, everything from hardware, optimization, through to how physics works in the game, through to like how everything renders.
You had no engine or any framework to work with at the beginning.
Right. There was no engine or no framework. It was just like, start from scratch, open new file, build an environment, then build the game. And so 90% of the work wasn't actually building the game at all. And then the game engines, as you rightly say, the game engines came along like Unreal and Unity, and they completely changed the game because it meant now 90% of the work that you previously had to do was for free. You had physics, you had optimization for hardware, you had the rendering engines and all this kind of stuff. And so the game engine was the start of this massive boom in the games industry, where the games industry is now bigger than TV, music, and film combined, like in terms of revenue. It's an absolute monster. And so underneath Scripto is like your command line to it's your programming tool. But part of the power of Scripto comes from this thing that sits underneath it called the Radix Engine, which is like a game engine for finance. And what that does is it gives the ledger a bunch of primitives, and they're quite abstract primitives, like, a token is one of them. But like, we also have this concept of resources, we have this concept of badges, we have this concept of NFTs, but these are not in the same way as you think of like a ERC20 contract. Like you can edit how you want those tokens to be, but the concept of the object of a token, something that represents value that can be transferred, like obviously the rules around that, can they be locked, can they not be locked, is there more transfer, can you do multiples of them, all that kind of stuff. That's all editable in the same way that in a physics engine in a game, you can edit gravity, but normally gravity is one, right? And so all of these tools sit underneath the programming language. So when you say in the programming language, like you declare a token and then you declare a swap between two tokens and you declare those rules, that's like 4 or 5 lines of code. It's not, you don't have to define what a token is and define what a swap is and define what a pool is. Like all of these things are just part of the primitives of the language. And because we're specifically focusing on decentralized finance, we can create some very powerful primitives that work amazingly well, specifically for decentralized finance. And by the way, I do view non-fungible tokens, NFTs, as 100% part of DeFi, 100% part of DeFi. I think they haven't like converged yet. Like mostly it's the art world, but my God, there's some incredible use cases for NFTs within finance. And I think like we're like 2017 for NFTs, like 2017,
Right.
like for tokens, we're at like 2017 for NFTs in 2021. Like next cycle, 2025, I think you're going to see this incredible confluence between finance and NFTs that like we're kind of like already starting the process of thinking about what that would look like. And that's how we get Uniswap in 155 lines of code.
It's absolutely incredible, Pierce. I think the one thing that's going to be really exciting here is that you guys have a mixture of kind of three things. You have developer time that's increased, you have scalability and security, and it's all built around these improvements, the Radix Engine, also as well, Scripto, the native code and language for the platform. I'm curious, what should people look forward to in this case? I understand we've got December 15th coming up where people will get the full range of Scripto, but to set expectations, right? This is, again, the long game when it comes to Radix. Right. You guys are focused on the long term. So my understanding is that when these libraries become available, where people will be able to dive further into Scripto on December 15th, the idea is that over the next coming months, until the mainnet actually deploys in this case, in the sense of being able to really utilize Scripto as a language to build applications on top of Radix, this is just going to be a time window where people can basically build test applications to start learning about Scripto.
Yeah, so like we've taken a long time looking at how the successful developer communities, successful ecosystems build, like in Ethereum. And the way they build is actually, it's quite slow at start. Like you have like the starting community, the starting ethos is so important because it sets the basis for everything else. It's a bit like not establishing the company culture and product market fit early in a company and then just throwing loads of people into it. You can end up having a really like unwell-defined company with an unwell-defined ethos, and that can end up being much less successful than a company that really clearly understands what its raison d'etre is and what it means to be part of that group of people, right? So as you rightly say, like this Radix is a roadmap-driven platform. We launched our mainnet in July of this year, which is the Olympia release. You can't do much on that. All you can do is transfer tokens, stake to secure the network. And you can also do some basic, you can create some basic tokens which uses the first version of the Radix engine, which we've been sort of just proving out this concept of the Radix engine as part of our tech journey. But that's already got over $1 billion of tokens staked to secure the network, which is amazing. And that's got seeing a lot of traction in terms of decentralization of the community, decentralization of the holdings, decentralization of the node runners. And that was really important because, if you're going to encourage people to build on top of these platforms, like once they've got over the point of being like, yeah, I'm excited about building on it, the next question is like, is it secure? And like that's a big thing that we've been building over time, because we know that when we get to the point that DeFi can release on top of Radix, we want there to be as much security as possible. Like $1 billion of security is great, and we just want to keep going and make sure that that's there for when the ecosystem can finally deploy on top of the network their DeFi applications. The other part of this is when you release a new language, which Scripto is, it takes a bit of time for people to get their head around it. And we've done one more thing with that. It's not just a new language, it's a new programming paradigm as well. So the programming paradigm we call asset-oriented programming. And this it requires a little bit of a mindset shift. You go from this concept of on Solidity and basically anyone who's using the EVM, so Avalanche, Solana. Solana's not, but Solana has the same programming paradigm as the EVM, and Near and all these ones. You go from this idea of you have programs with messages to this idea of tokens like physical objects, and I always have to have something that contains the physical object. And when I pass the physical object, I can only be in one place at a time. All of these things massively add to the security and safety, but it does take a little bit of a brain flip, especially if you started off building in Solidity. So that process of both proving out the language, right, taking some time, releasing the language before it gets integrated into the mainnet, and taking some time to make sure that it's solid, that it works in the way that people want it to, that's intuitive, and getting feedback early at the same time as building a community of people who believe that we do, that the current way of building DeFi is fundamentally broken, and that there needs to be, for us to get to the next level of complexity, for us to get to the next level of security, for us to break into the mainstream, we need better tools for building and better paradigms for programming these applications in. And so we're taking this approach of like, I keep wanting to say slowly catchy monkey, because like one of my friends says it all the time, but like you just very carefully building the community that want to play with it, like want to try it out, like want to do experimentation, not saying, oh, I'm going to put $1 billion into this immediately, but making sure that the way we build is rational, sane, and intuitive, so that when we get to Babylon release, suddenly there's not just a load of projects that want to deploy on top of Radix, but also a community of developers who can support each other and who those projects can pull talent out of. Because as I said, like right at the top, the biggest problem is time to talent. The biggest problem is access to talent. And so a big part of this gap between it releasing the language and Babylon next year is also about establishing that base of developers who are raring to go with this new opportunity, but fundamentally believe that this is the right way of building DeFi. This is the future of how big DeFi is going to be built.
I think you guys have your eye on the prize and stuff, because that's the problem I see with so many layer ones is you can have phenomenal technology, you can find means of scaling, but there's not enough of an emphasis on developers. I've seen it with very few layer one alternatives within the cryptocurrency space, if you will. There's not a good focus on developer tools, simplifying the developer experience. I think you guys started off right by not only listening to developers within one of the strongest communities in the crypto ecosystem, Ethereum, but being able to learn about their frustrations and build an overall arching solution to make it simpler for them. So one thing I just wanted to say real quick as we close things off here, Pierce, where would you say people should go to? I think last time we chatted, you guys still always recommend join the Discord, join the community, really get hands-on in it. But if maybe people want to look through Scripto, you guys have some basic documentation online on GitHub. That's correct, right?
Yeah. If you're like that sounds great, but show me code, right? And I completely understand that viewpoint. GitHub, the Scripto repo is now open on GitHub. The code is still quite bare bones. So what I'd recommend is go onto the Radix GitHub repo. From the Radix GitHub repo, you can read through the basic docs, then jump into Discord. And in Discord, there's specifically a Scripto channel where there's a bunch of people already hanging out and helping each other out. And that's a great like next step to go to as soon as you have questions around Scripto. As I say, 15th of December, this all comes out. And so then you will have more documentation, more sort of like of a knowledge base there for you to sort of get started. But yeah, that's definitely the best place, GitHub and then Discord. And the last thing I'd say just sort of quickly is like, we haven't really discussed this at all, but like if you're a developer and you're thinking about getting started in Scripto, I'd also strongly recommend checking out how we're doing developer royalties, because I think that this like idea of open source code that allows the developers who help create the tools to get a share of the success of the ecosystem that builds on top of those tools, I think is just so exciting. Like I think it squares the circle of DeFi at the moment, where it all has to be open source, but only a few projects ever leverage it. But they're leveraging like thousands, if not millions of hours of like developer toolings that's been built to make that possible in the first place. So what we've done in Radix is create this extra layer within our platform, which means that if you create a great component that then is integrated into another DeFi application,
people can just plug right into it and pay a slight rate. Yeah,
exactly. And I think that's just so exciting to create this next level incentivization layer to these platforms, because like decentralization is where we want to be, right? We don't want the foundation to constantly having to be like pumping out money into the ecosystem. That's not a sustainable way of doing it. You can chuck money at people for a while, but like what I'd much rather have is a system that automatically incentivizes success and the people who are most helpful in the ecosystem in a way that don't need to have anyone in between it. And we think this developer royalty system is a hugely beneficial way of doing that.
Well, Pierce, I'll say this, we're going to be marking the date, December 15th. We'll be looking out for it. I know I'll be taking a dive through it. And as someone who is terrible at programming, I will give Scripto a shot to see if I can if I can build anything of value. I'll explore the AMM capabilities. That's definitely something that I'd be excited to learn more about and see if I can build any contributions to. So Piers, thank you so much for making the time. It's always such a pleasure to get to chat to you, and really wishing you guys the best, both in your travels and outside of that as well, towards the December 15th date. So we're looking forward to it.
Thank you so much. It's been such a pleasure talking to you as always.